Meet Bob. He dreamt of starting his own business. And he had a friend Bobino who failed because he didn't understand what cash flow is. Don't be like Bobino. In this video, I'll share the financial basics you need to know before starting your business. Straight from my experience as a business school student. Let us begin. Basics of finance. Start with identifying your business goals. Are they short-term financial goals or long-term goals for your business? Short-term, I would identify as 1 month, probably quarter, 6 months, and 1 year. This way I would know, yeah, all right, this is a short-term financial goal, business goal. And a long one, I would identify as 5 to 10 years, and it would require more financial planning. And I would also recommend having some kind of financial pillow. What do I mean by that? Let us say we have a budget of $1 million for our business, and I would have $100,000 cash saved, or not necessarily cash, but liquid money saved if something goes wrong, that I can use that amount of money as my safe financial pillow. Yeah, so for that. And I would use SMART goals. What are SMART goals? They are specific, measurable, relevant, and time-bound. Those are the important things you gotta keep in mind. Also, study your current financial situation. Check the income statement, balance sheet, and cash flow. Those things matter a lot in order to know where you are in your financial situation. And if something is wrong, you can quickly work on fixing it. The next one is understanding the business's financial health by analyzing key metrics like liquidity. Liquidity basically means how easy is it to turn your asset into money. Let us say a house isn't very liquid because it takes some time to sell. So we wouldn't consider that a liquid money, liquid assets. And profitability of your assets and debt ratio. Debt ratio is total debt over the assets you have. And that's how you would calculate your debt ratio. Determine your starting capital, current assets available for investment. It is important to know where you start and how much money do you have for starting. Create a budget. How much revenue you're going to receive each month. Identify costs, fixed costs, variable costs, and one-time costs. Fixed costs are the ones that you pay monthly, like rent, salaries. Variable costs are raw materials, shipping, and stuff like that. And one-time costs are the equipment purchases, product development, and the things that you would do only once and for all, and probably you won't need it for a long time. Maybe you would need to renew your equipment every 5 years, depending on what business you are. Let us say you are in a restaurant business, so the machines, the equipment will serve you quite a long time. That's why we call them one-time costs. Calculate main metrics and ratios. Like net profit margin measures profitability. Current ratio indicates liquidity, customer acquisition costs, and a lifetime value for growth and incorporate taxes and compliances. Set aside for tax obligations, income tax, VAT, payroll tax. Stay informed about legal requirements and ensure compliance with financial reporting standards. Use accounting software or hire a professional to simplify record keeping. Be very flexible. If you have a lot of amount of money from your business, invest the money. Improve your business. I would invest back to the business or myself, learning new skills that I can apply for the business to grow it even further. Always be flexible that things might go the other direction that you didn't want to. For example, crisis happened, COVID hit. You have to be flexible in that way as well, not only financially, but also in general with your business. You should be adjusting to any situation or circumstance that happens to you. This way, your business will grow, whether that be financial or not. Thank you for watching this video. If you enjoyed, please subscribe and watch this video next. I hope you like it. Peace.